Hey, good morning. Comment allez-vous? You guys ready to go? Yeah, so hey, it's a Thursday, the best trading day of the week. Thank you for being part of the Forex.Today YouTube community. Nearly 19,000 foreign exchange traders. I think that's really cool. So thank you for all your positive energy that you bring to this webinar, this live stream every single day. And please help YouTube make a good decision by helping them understand or comprehend that this is a good thing that they should be promoting. Anyways, without further ado, let's get on with it. Let's go. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I like to trade currencies. How about you? Hey, gold is fine. Oil's fine. Cryptocurrencies are fine. That's great. But the bottom line is I'm a currency trader. So that means G8 to G10 is what I like to focus on. And our analysis that we conduct here in these live streams are based on technical and fundamental analysis. Things like long-term technical trends, but also seasonality, macroeconomics, monetary policy, and fiscal policy set by the central government and by the central bank. Hey, that makes sense, right? Yeah, I know for sure. So anyway, so if you're into this, please be a subscriber of the community so that you will be alerted to my future live streams. So thank you for being part of that. So what will we do today? I think we'll just do technical. Seems simple enough, right? So ask questions, get involved. I'll answer them. Maybe you take some notes. That'd be great. You can document what you learn. That'd be great. Because if you don't remember, then it never happened. I'd like to thank TradersWay.com for being part of our community as well. They are a foreign exchange broker. You are a foreign exchange trader. The relationship is based on trust. And so they've earned my loyalty and respect and my trust long, long, long ago, not through words and love language, but instead by their actions, in particular, the actions that were highlighted when the Swiss National Bank lied to the world and crashed the market. Major players went out of business in the foreign exchange world because of that singularity in the price-time continuum. And yet, Traders Way wasn't hurt at all. And what that told me is that they don't trade against their clients. They actually execute the trades into the interbanking system. And I'm like, that's it right there. Okay? Yeah, nice website, sure. Good customer service, sure. But ultimately, it's trust that you're going to need when you choose your execution partner. So anyways, tradersway.com. Open up a demo account, give them an opportunity to earn your loyalty and respect as well. I still remember that day. That was a crazy day. Amazing. I thought we were going to go into another global crisis. Global financial crisis. Anyways, one of the things I thought I'd do today is change this to daily and focus less on the short term. Maybe it makes a difference, maybe it doesn't. But as you've noticed probably in the last couple of weeks, we are in the depths of summer. America and the United States are on vacation. And you notice some of the volatility? Up 75 pips, down 75 pips in the same day. Yeah, you're not used to that, right? Well, I told you. I warned you. Okay, I told you. I warned you. All right. So imagine if you just had a portfolio, nothing actually happened. All right, cool. So generally right now, dollar has been weak and is gaining some strength. That's pretty good actually, because, right, in this period is when the real yield started tanking. And now we're sort of in a stabilization period, maybe. Okay. To give you an example, where's my drawing tool? I'm going to guess here just, okay, but I think around May, let's not use real yield. Let's use 10-year. Okay, we'll do the 10-year yield. And I think around May we were like 1.5. Okay? And now we're 1.18. What happened during that period? Actually, this fell even lower. 1.2, and now we're 1.8. Wait, 1.12. Yeah. Okay. So what seems to happen? Okay. As yield falls, it seems that the dollar has gained strength. Okay. Simple enough. So when yield is falling from 1.5 to 1.12, what's happening is the Treasury, I'll just say bond, okay? Bond prices have been going up. There is a bull market in the bond market. Cool. And if foreigners are buying it, it drives up the dollar. Cool. So now now I have you worried about this rotation. Are we on our way to 1.25, 1.5, 1.75? Okay. I used to say I think 10-year T-note yields are going to go to 2.0 by the end of the year. I'm going to kind of adjust that to maybe 1.75. Okay. But that's me anyways. That's me. Okay. Cool. Okay. All right. So what do we got going on in the world? Euro down. Okay. Yen all over the place. Swissy very strong. Kiwi and Aussie regaining some strength, some pound gaining some strength. You know, Bank of England stuff. BOE day, eh? Some CAD recovery. So let's just go figure this stuff out. Okay. Let's go figure this out. What do you think oil is worth? You're like, well, Wayne, that's a weird question. No, that's what you should be asking yourself all the time. What is oil worth? Using MACD as a guide, this is a bearish market. Okay. Should you be buying down here at 68.5? No, not according to technical analysis anyways. Okay, maybe you want to change this and look at it from a different point of view, and that's always a good idea. Okay. Okay, back out a little bit. What does this say? Well, bears selling here are targeting this price level here. So would you buy oil at $64 a barrel? Or would you buy oil at $61 a barrel? Well, you don't really know. Those are decent prices, but now you need to figure out what time, when do you actually buy? And that's where technical analysis comes in the form of a reversal pattern. If you see a reversal pattern in here, it's more likely to be a reversal. Okay? Okay? So now you got to sit and wait. The other way to play this, of course, is you say, well, in the summer doldrums, it's going to play like a range. But whatever. Do what you got to do, son. Okay? So 65, maybe 60. How about that? You can say plan A, 65, and down here maybe 60-ish. Cool. Bitcoin coming down hard, in fact. That's interesting. All right. Let me ask you, do you think psychological levels are important for Bitcoin? Oh, for sure. Okay. Amazing, right? All right, let's look at this one from a different point of view. What do you think of this? What does that predict? What does that predict? Well, it depends on the one you're looking at. There's two things that could be going on here. They're both true, but you have to decide which one you trade, or both. This predicts this. Okay? So the target here is 33,000. We'll call that short run target. Long run target, meaning the predicted bottom for the month of August, is 29,000. Maybe 25,000. How do you feel about that? Okay, what do you think about that? Okay. Well, let's do a poll. Okay, I'm sending out a poll. Be interesting to see what you guys think. Okay. You guys see the poll? I'll give it a few minutes. Okay. Now, I find that many people are opinionated, but they don't have any facts to back up their nonsense. So, are you watching real yields, right? Are you watching the real negative yield? Are you watching for dollar flow? Are you looking at, are you trying to correlate Bitcoin with something like the stock market, either going up or down? Do you believe Bitcoin is uncorrelated? Okay. I find that most people don't have any sort of opinion. I think it'd be rare when somebody says, well, the real negative yield in the United States right now is developing into some dollar strength that is pulling down gold. And therefore, if gold is an alternative asset that's sort of somehow uncorrelated, Bitcoin should behave in a similar fashion. And therefore, at least in the short run, you would see Bitcoin coming down, maybe retesting 130 again. I rarely hear stuff like that. They're just like, blah, 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 right? And the interesting thing about Bitcoin is people are so passionate about it, but maybe not necessarily factual. Passion is great, but I want the analysis too. So anyways, let's see what you guys think. Okay. Okay, cool, right? Hope said, hey, man, I'm going to buy it right off that green box. The interesting thing is, was it 2 weeks ago now? Yeah, I guess 2 weeks ago, I was long Bitcoin here in the cash market, and I exited right up in here on that big candle. Non-leveraged, real cash, like it was, I literally held a Bitcoin. Well, I own a third of a Bitcoin, I guess, and I made $3,000 profit. Nice. And it was funny because I was booking my stay at the Harvard Club in New York and booking my airplane and everything, and I'm like, oh, look at that. I've already paid for it. Free vacation in New York City. Okay. Mohammed says, but Wayne, the price already reflects market fundamentals. Okay. So you believe in the efficient market theory. I do not. Okay. And Mohammed, just per point of view, I'm not trying to trash your point of view, but I will explain mine. I think people that only trade price, do not have a full picture of the world. So when they're like, you don't need to know fundamentals, seasonality, macroeconomics, I think they're doing themselves a disservice is the nicest way I can say it. Okay. Cool. So anyways, we'll just leave Bitcoin there. Cool. I mean, unless what? You want to sell it? Most people want to sell it. So why don't we just look at that for a second? Okay. Make sure you're on the clue train. Sometimes I'm not sure, and sometimes I forget to explain. But let's say now you are a daily bear. Okay. Cool. So you sell the pink zones. So tomorrow you'll sell probably pretty close to where we are now, but that would indicate a break below, okay, to, right, below this. Come on, let me redo that. Okay, below this, and therefore your next move will look like that. And you can see we already have the target for tomorrow, 135. Now, this is technical analysis. It doesn't say things like non-farm payrolls tomorrow. It doesn't think. So you have to think. Okay. So, here's the United States of America. Let's talk about non-farm payrolls. Okay, here's the United States of America. 3 weeks ago, I was here. 2 weeks ago, I was here. Okay. And I found that every hotel and bar in this area was begging to hire people. Every hotel, cooks, bartenders, bellhops, front desk people, cleaners, maids, security. Okay? If you wanted a job, you could choose. Okay? Then I go to a complete different part of the United States. And once again, every hotel, every bar, every restaurant, every tourist thing, I think everything. If you want to drive a truck, you can get hired today. If you want to work at McDonald's, check this out. McDonald's pays you $50 to show up for an interview. Yeah, they pay you to show up for a job interview, $50. If you get hired, if you work 90 days, they give you an iPhone. And there's freaking unemployed people. You're like, what? Okay. There is job demand for sure. And I think non-farm payrolls tomorrow, some people think it's going to be 1 million or 800,000 or 900,000 or whatever. That's fine. And I think there's demand for that because there's still 7 million people without a job. I think that the demand is there. Okay, but I think what we're going to find through my anecdotal research is that the jobs are there, but the people are not. Okay? 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 I think we could have a giant miss tomorrow. Doesn't really matter. But it may delay the taper. If we have a bad non-farm payrolls tomorrow, yeah, it could delay the taper till next year. What? By the way, what month did the Fed taper back in 2013? June? Sep? Okay? Or D's? June, Sep, or D's? What month did the Fed start their taper back in 2013? I think it was 2013. Take a guess. Type in a question mark if you're just listening. Chuck Duck is thinking ahead. Could be a rabbit. I don't know. Okay. I would be careful, though. I'm making a point here of when they could taper. That's one point. The answer is December. So right now, the market, right? The news media, the people on TV, the magazines and newspapers you read, they thought it was going to be June. Now they're like, oh my God, it's September. Okay? They're not going to do it with the bad non-farm payrolls. Now, Chuck Duck says, hey, well, so if that happens and if it's not September, then maybe dollar stays stronger longer. Maybe. But what I don't want you to do is say 2013 is the same as 2021. Okay? I think that would be not a good comparison. Okay? So maybe, but not necessarily. I think what we need to do is look at other things. Okay? But maybe. Okay? What do you think about WTI crude oil? Ali, where were you 15 minutes ago? Okay. Brainerd said persistent. Well, that would be anti-transitory. Also, we already talked about this. Really, I think last summer, I talked about it in a thing called Off the Charts with Wayne McDonald. So we talked about that more than a year ago. And what that is pointing to is a new higher natural rate of unemployment. Okay? Okay? So full employment or the natural rate of unemployment is what we're talking about. Okay? Of unemployment. Okay? What is that? Well, you have structural. And what's the other one? Structural unemployment. What's the other one? Type in a question mark if you don't know. Frictional, cyclical, whatever. Okay, there's different types. There's one type where you are looking, you left your job and you're going to get a better job. Or there's the kind where your job went away, like you used to work in a t-shirt factory and that went out of business. So now maybe you'll work at the convenience store. I don't know. There's a different type where you become obsolete. But here's one of the things that we were talking about at FX Boot Camp the other day. And do I even have a blank on here? I used to have a blank. I really need a blank. Yeah, I don't have a blank. Let me create a blank template. Hang on. Indicators. Delete, 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 delete. Okay. Now I got to go to properties. what am I missing? Guess even these I should get turned white. All right, cool. So now I'm going to save template, blank. All right, one of the things we were talking about at FX Bootcamp on, I guess it was Tuesday, is this idea of, how about a chart here? GDP and, wait. No, I think it's inflation. Sorry. Inflation and unemployment, I think is what it is. You might want to Google this too, because this gets complicated. But you take your long run Phillips curve, okay? And then you take your short run Phillips curve. And so now you have an equilibrium, okay? The equilibrium inflation, okay? And equilibrium employment or unemployment in this case. I guess just stick with it. I'll do U. Okay. And what we're talking about now is that, oh, and by the way, the long run Phillips curve is equal to the natural, this is what I was trying to get to, natural rate of unemployment, meaning when the economy is doing perfect and everyone that wants a job can get a job, but then there's still people leaving their old job to get a new job, so they're unemployed, but they're going to get a job. Then there are those that lost their job and are trying to get a new job, but they're having trouble because they're not really qualified. That's also normal. And then those that just don't want to work, they don't even get counted. Like eventually they go on unemployment and then they go on welfare and we kick them out of the workforce and they're no longer counted. What we're talking about now, and this going back to what Brainerd said on Friday, is that there's likely to be a shift here. Okay, long run Phillips curve 2. Okay, we'll have more unemployment. Okay, and you'll notice that on the short run, well, this could lead to actual lower wages. Okay, lower levels of inflation depends on what you're analyzing here. Okay, but the reason I say this is complicated because you're going to use this in your analysis now of solo growth. Not solo meaning one, but I think it's 2 L's and no. 1 L solo, I think it's just 1 L solo growth model. And what you're now looking at, and I'll do it over top just to show the complexity, but now you have real GDP with diminishing returns. Okay, you have your levels of investment, which is equal to your levels of saving in the economy, and then your depreciation rate. And what we're talking about is shifting things like, let me do yet another color. Okay, if you can shift this higher so that I2 is up here, then what you're going to do is shift this steady. You're going to shift your steady state this way and then shift this upward to Y2, productivity. But inside of this, you would have to be able to read in your long run Phillips curve and your short run Phillips curve, right? And that'll tell you, so when Brainerd says, okay, when Brainerd says, what did she say? I called it non-transitory. What she's saying is, right, is that there's going to be more people not working for longer periods of time. Now, sometimes that means you're going to have more people on welfare, but it also could mean there's more people simply retired. Okay? But it's unproductive. Okay? There's people on welfare that get free rent, food stamps for free food, right? And maybe some money. I don't know how it even works, right? I don't know. They just get a bunch of stuff for free, and then there's no productivity behind it. So I don't know what you do all day. I think you sit in your apartment and you watch TV, right? But that's not very productive. Okay? Do you know what I'm talking about? So anyways, that's what Brainerd is saying, and you have to say, oh, well, that's going to impact this, and that's going to impact that. Okay? Cool. Anyways, we're stuck here. This is where we were yesterday. Okay? We're still in a range. Remember what I was talking about yesterday? Yesterday. If you're a bear, you're targeting this. Okay? I drew it like this. Down, up, down, up, down, up, down. Okay? So bears did what they were supposed to do. Bears did what we talked about yesterday. Okay? So if you're a bear, it looks like you did what you were supposed to do. Now, look at this price action. Look at the price action. Let me zoom in a little bit more. What does this tell you? Read between the lines here, or in this case, the candle. Mohammed, real yields are negative 1.8 right now, maybe even more. So anyways, guys, what does this tell you? The market's crazy. Volatility is nuts. You can't trade Forex and make money. What does this tell you? Liquidity grab stuff? No. Look, how do professional traders trade, especially during the summer? They said, well, we'll sell it up there. Done. And they walked away. That's it. And someone else is likely to have done this and walked away. What did you do this week? Well, I threw an order down around 1800. I'm going to put my stop around 1750. And that's what I did for the month of August. And if they're right, they might make money. If they're wrong, they'll probably lose money. An amateur trader might have 27 trades. And they're saying, oh, hang on. Where'd my drawing tool go? They're saying things like, hey, I lost you, by the way. Hang on. Why did it just do that? What just happened? Hang on. I must have clicked back. All right. Okay, let's go back to here. Okay. A newer, inexperienced or smaller or day trader, intraday trader, maybe a scalper is inferring a whole bunch of things like, oh, look at this, and this means this, and this means that. And there might be a bajillion trades here. Now, it's okay if you're doing it right, you're just buying it down there. That's just a swing trade. That's cool. And maybe you're getting knocked out here, or maybe your stop's there, but you're not over trading. Okay? The danger is when you see a candle like that big green candle and then you buy. And I've warned you literally a million times. I think literally over the last 20 years of me doing it over a million times that this will lead to failure. If you didn't have a plan down here to buy it, then you're a fool. Wayne, don't talk to me that way. You're trading without an opinion. That sounds foolish to me. Okay? Okay, bulls buy down here. Bears sell up here. What did I say? I think it was yesterday or the day before, as soon as I ended the webinar. I said, if you don't do one of those things, you're a pig and pigs get slaughtered. And I think someone that chased this move got slaughtered. And you'll see this more during the summer, right? You'll just see that more in the summer than other times of the year. And I think maybe you might be paying the penalty or something. But what I'm trying to teach you guys is you have reason and logic for being a bull, or you have reason and logic to be a bear. And I want to re-emphasize that's what these traders are doing. And that's what these traders are doing. They're buying at prices that their analysis say is a reasonable risk. And right? And then unreasonable traders are doing something else over here, trading in the middle. Mohammed says, can you provide us a small hint on how we build that sentiment? You flip a coin. Swear to God, Mohammed. That's it. Flip a coin. And if the coin says you're a bear, now you're a bear. Which means, and I mean for let's say the rest of the year. And so as a bear now, you can only sell at this price. Maybe it's a risk because you're in the middle to sell at this price. But that's, meaning like this. But that's a little dangerous because you're assuming. But the assumption would be based on a monthly swing. So it's not good, but you can do it. Or you sell here. And because of that, Mohammed, there's only, right, a finite amount of opportunities based on technical analysis in which you could trade. You only sell high at resistance. It's not that complicated. Because you've made a bias, you only sell at resistance. Okay? So where's resistance? Well, we know this is resistance. Okay? A breach of support may make the old support level resistance, or a breach of this support would make this resistance. So, okay, this is not resistance, but this is resistance. You get it? Because one touch doesn't make resistance. 2 touches makes resistance. 3 touches makes resistance. 4, 5. Okay? You can go, as long as we don't go higher, you can always sell at 1825. Why? By definition's resistance. And if you're a bear, you have permission to sell at resistance. Now, when you get to the price, I recommend you drop into a 5 or a 15 and watch it roll over. And if you do, take a shot. The second thing is if you break this support, it might become resistance. We call that price action. So you take a shot. Or if you break this support, okay, That we call that price action, and so on and so on forth. And your basic strategy now is a swing with day trading. And all from flipping a coin. And if it's going up, Mohammed, guess what? As a bear, you don't do anything. Okay? Well, Mohammed, if you don't know how to make market sentiment based on macroeconomics and analysis of the monetary policy of each country, then flip a coin and now that's your sentiment. Which means, Mohammed, you're only trading by selling lower highs in a bearish market. What's your success rate going to be if you're only selling lower highs in a bearish market? Probably quite decent. Okay? Okay? And then you say, so you're how do you do it on intermediate sort of month over month? That's called seasonality. Okay? You have to understand how the market works. Okay? Okay? I'll give you an example. This is gold. I prepared the swing trading group in this period for dollar strength. Okay? Then what? In here, I prepared the swing trading group for dollar weakness. And then here, I prepared the swing trading group for, I call it sort of neutrality, where because of the lack of volume and volatility, anything could really happen. But the thing is, you're not expecting this anymore. Okay? And now we are stuck in the neutral zone. But that makes sense because, that's why I'm like, in this period, this is the Fed meeting, by the way. That's what that vertical line is. At this point, anything could happen. The market could go up. The market could go down. So make a decision on what you're doing here with your money. Okay? But the thing is, we knew that this vertical line was a key moment in time. The next thing is, by the time we hit July 1st, which is here, generally there is no market. I said the reaction to the Fed meeting is going to be seen, and it could be down and it could be up, but I don't really know. And if you go back enough years, I don't know. It's just really inconclusive. So do what you got to do. But that's going to be based on that Fed meeting. The next thing is, this being Canada Day is the turning point, and that's where there's total neutrality, and that you should start hunting at rabbits instead of hunting big game. And look at that, guys. And it's even tightened even more. And yet there are traders in here going for gold. And I say, well, if you look at the season, we're right in the middle. We're kind of just right where we're supposed to be, waiting. Okay? Well, Mark wants to know when all the money is going to come back to the market. Well, I will tell you today in this swing trading group at 2 o'clock in the afternoon. Okay? I will tell you. If you want to join the group, fxbootcamp.com. Cool. So, what do you think is reasonable in the short run? Okay. Cool. Andy's going to be there, the Drew Meister. Don't call me Andy. Don't call me Drew. What's up, Ron? Mohammed, I feel like you want me to give you answers, and I'm teaching you how to make a decision. Here's the number one thing, Mohammed. I could be wrong, so who gives a damn what I think? Okay? I'm trying to give you the pieces in which you make your own decisions. I don't know the future. Okay? But I know the things I'm looking for to make a decision. Right? Okay? What's up, Brian? Oh, yeah. You'll try to be there today? You work during the swing trading group? Yeah, it happens, man. That's why we record them, huh? Buy or sell now? What, gold? Look at this. Dude, what do you think? Answer that, Kong. Kong Dan Tran. Okay? If you look at this and you don't know what to do, you should stop trading. Okay? That's the easiest answer. If you're going to try to squeeze juice from that, I don't get it. Like, I don't get it. You lack a trend. Maybe this is going down here, but see, you were supposed to sell here. So now you're asking, I mean, I don't get it. I don't get it. I don't know. I don't want to even go there. Forget it. I'm going to move on. We did oil, we did Bitcoin, all that kind of stuff. Cool. Okay. Well, Mohammed, you have to learn at what you look at. Okay? You have to look. You have to learn what's important. Okay? Okay? You have to decide what's important. La 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 la, la 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 la, la 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 la, do 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 do. Okay. Do 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 do. Look at the time when I live. Okay. 2:00, Marky. By the way, thank you to those that have sent me macroeconomic reports on various countries. Thank you for volunteering for that. Mohammed's funny. Seasonality doesn't always work. Dude, it always works. But you have to understand what it means. If I told you there's an 86% chance when you pull the trigger, there won't be a bullet. and you hit a bullet, it's still an 86% chance there's no bullet. Okay? The probabilities are always going to be there. So if you study 10 years of data or 20 years of data or 50 years of data, you'll get different results. Now you're going to have to normalize things, right? So that you're comparing relative data, but ultimately you're going to get probabilities based on what happens to the Aussie yen over 25 years of August data, for example. Okay, you found that it goes up 87% of the time. Doesn't mean it's going to go up. No. Because this year, there's stuff going on that drives the real yield to record levels of negativity. But it does say, after 25 years of studying Aussie yen behavior in the month of August, it goes up 87% of the time, meaning it closes higher than it opens. That is true. But if you're like, I'm going to buy it because of that, now you're gambling, you're betting that the average will produce upward momentum. But here's the problem with average. Average rarely happens. And you're like, well, what do you mean? That's the average. Yeah, okay. Well, you have how do you want to do a normal distribution? And you might find, well, much of the time it drops, or much of the time it goes up, drops, and much of the time it goes up, and then you're going to bet on this. And you're like, well, that's not quite right. But statistically, that's half. That's average. And you're like, well, it almost, right? There's almost no data suggesting average. It almost always falls, or it almost always rises. And then we say the average is here, but average never really happens in this distribution. It rarely has happened. It has kind of happened, but most of the time it's doing one or the other, which means if 50% of the time it goes up and 50% of there's no relationship, but you're betting on the average of no relationship. But it doesn't mean it's wrong. It means you don't understand sort of the math properly. Okay? What I told you, okay, is between July and August that there's no fundamental trend and that you are essentially market neutral and you have the freedom to be both a bull and a bear. You can shoot at rabbits. And generally speaking, for many assets, that's been good. That's been good advice. Okay? This is the moment in time where I gave you the freedom. Okay? This is now not gold, but Aussie yen. Where's July 1st? July 1st. I guess this is July 1st. Okay? There's sort of the mark where you definitely go neutral. This is the end of the fundamentals. Okay? And this is money coming out of the market. You guys remember me explaining this? Money coming out. I explained it in this webinar for 3 or 4 or 5 weeks that you got to get ready. Money is coming out of the market. Okay? And the way I define that is it doesn't necessarily mean people are selling Aussie yen. They're exiting Aussie yen. Okay? This is when they start to leave. Now, going back to someone else's question, hey, Wayne, well, when will it come back? Well, I can tell you, based on seasonality, my best guess. And it's over several week period. There's like a window. It doesn't matter. If you use technical analysis properly, you will see it. But the thing is, I am anticipating it. Anticipation. I have anticipation of the reversal in a window of time, which means I'm ahead of the curve. I'm already looking around the corner thinking, ooh, this is probably an area I will want to buy, where other people don't really know what's going on. And so in a situation where someone might try to sell this, okay, this is you're right, this is a top, this is a breakout, this is a new sell, this is a breakout, this is a new sell, this is a breakout, this is a new sell, and they're going to continue doing it until they lose money, which is actually an okay thing. But what I'm going to do is try to anticipate based on the idea of seasonality. I have a general idea when to plant the seeds. And I have a general idea of when to harvest. And then I have to look at the conditions of the weather for planting, or the conditions not just of the weather, but also of the crop that I'm growing in which I should harvest. What day should the vinter crush? Do you understand they sweat bullets over this? Where the vinter is in the field at 2 o'clock in the morning, and he says, not tomorrow. And 6 hours later, he says, you know what? It's today. Boom, let's go. Pick the grapes, pull them down, right? Just because it's down to the hour in which you need to start picking. We need to get this blueprint. Yeah, just do your research, bro. Okay, by the way, it's in one of the courses. So anyways, right? But I have a meeting after our webinar today with a PhD, not the economist one, but his PhD is in trader psychology, but he's a developer, a programmer, and a researcher. And I'm going to have him go back through decades of candlestick data to build a seasonality model. But that's for me. Okay. That's the cool thing about money. Money is productive. I can hire someone, they produce something for me, I give them money, they can eat. Cool. They like eating. I like having seasonality model based on tick data. I love it. Instead of buying a TV, right, I spend thousands of dollars on developing a seasonality model. Okay? Okay? Cool. Chrissy says the oil trade plan is starting to develop. Right on. Okay. So what do you guys see here? What have I been teaching you? Quite a bit in the last, I don't know, week or two. Roll reversal. Okay. Roll reversal. Roll reversal. Okay. And now you should be doing this. Okay. Price action. Double bottom, higher high, higher low, buy. Higher high, higher low, buy. Higher high, higher low, buy. Okay. Consolidate, consolidate, consolidate. Higher high, higher low, buy. Consolidate, consolidate, consolidate. And now if you're a trend trader, you might have an opportunity to let it make a higher high and then buy the dip. The other way of doing this is the 21.55 cross is technically when the market becomes bullish. Okay? And you say, but Wayne, it might have been there might have been a cross over here, and then there's a cross over here. Which one do you believe? None of them, because this is called braiding. This is why you want to use moving averages in conjunction with oscillators, or in conjunction with candlestick patterns, or in conjunction of price action. But what matters here is it turned bullish and made a higher high. This is when you freak out, right? Okay. Right? Mohammed, I only pay attention to macroeconomics. I don't give a damn about news. ADP was a miss. Okay, ISM service was a hit. So what? Who cares? That's not fundamental analysis. Those are data points. Maybe they create volatility, maybe they don't, but I don't care about news. Okay? So there are a lot of people that pitch news. This is their thing. They have a spreadsheet. And they have, right? What do they have? ISM in August that came out yesterday, right? July, June, May, April, okay, March, Feb, Jan. Okay? Guess what? My opinion, my bias didn't change during any of those. So why is it relevant? I only care about this. And I only care about the Fed's response to that. So I couldn't tell you what the March ISM services was or the June. August came out red hot. Well, so what? Okay. How about trade deficit? Did you guys pay attention to this one? That's a skew. Okay. Anyways, you see this? Oh my God, did this come out today? Month over month, I believe. Oh, he might be doing a different thing. Yeah, but whatever. It's overly complicated. All right. My point here, guys, is there's more money leaving the United States for trade than entering the United States. It is month over month is what you meant. Yeah. Right. What does that mean? Okay. So what about all this other nonsense? Well, okay. What else is going on? Okay. There's a current account and a financial account. What's going on in the financial account? Or did I already kill my... I don't think this is going to be good. Will this give me the real one? Yeah. Sort of. Good enough. Okay. There's a negative yield. And that's driving up the dollar. So that's money flowing, not primarily, but let's say there's definitely some money flowing into the United States. So USD, okay? There's some money flowing towards the USD so foreigners could buy bonds. But at the same time, Americans are sending USD out of the United States to buy goods. But at some point, when you watch the real yield, or let's say treasury yields, go up, then what you're seeing is more likely this. Or I guess this makes more sense. I don't know how to draw it. Okay. Down. Okay. So the question is, when will that happen? Well, did the stock market fall this summer? No. Did the bond market rally this summer? Yeah. Maybe it's a hedge. What will happen to the stock market? What will happen to the dollar if the hedges are removed? I don't know. That's why we need to be there. Okay? But don't listen to me. I don't know anything. I'm doing research to try to make sense of all this data myself. If you're thinking, well, Wayne told me this and therefore I'm going to do that, you're depriving yourself of your own level, your own destiny. Okay? because I don't know the future. I'm trying to predict the future. Okay. Cool. So anyways, would you buy Aussie yen on the daily 21 at resistance? Would you buy that? The next question is, will somebody likely sell it? And at what point, if you think the answer to that is yes, at what point can you verify they likely have sold it? You understand? That's the thought process that you should be going through. Where do you think they threw their order down? Maybe it's 81.50. Maybe it's way up there. You could then say, well, you think it's going to rotate over here. So currently then, you're going to buy the dip and then exit here for profit. That's what a bull might do. Okay, and a bear might say, ooh, this might be interesting up here. Okay. Johnny, about the 4-hour 21. Yeah, way back down in here. Yeah, that's not bad. I think I'd rather have you enter lower because of a basic assumption of maybe that. But maybe it all works out to be about the same. Right? Where you're like, okay, we're approaching double bottom. Drop into a smaller time frame, and the first opportunity is always going to be the bottom, and then it looks like you got the up, the down. That's a good trade. Okay, although you're stuck in the middle, right? So you're around 80.50 probably. That's cool. And we know we're going to be challenged here around 80.50. There's a couple of reasons. One, it's resistance, but two, it's also the bearish sell zone. Not that I know people are going to sell there. I know that people, if they are bears and want to sell, that's a price based on past performance in which they would consider it. But we don't know things like seasonality. They may say, you know what? I want to be long in here. But your algorithm doesn't think that way. Okay? Yeah, killing the skins. Got you, Johnny. I'm just wondering if there was sort of an earlier, but I guess not. I mean, it's tricky. Yeah. Good. Rabbit stew. Okay. M2 holding. Okay. Bears will sell it around. Bears will sell it around Let me mark it up. 1850-ish. Looks like they've already tried. 1850 and then I guess 19, huh? It's really bad price action. Guess I'll just connect these. It's basically 19. Okay, so if you were going to try to be a bear, you're going to wait up here. Okay, take it down and there. Okay, remember we're going to lose more volume and volatility due to NFP tomorrow. So that's just technical here, but remember this is going to be under threat because of NFP. So like, don't read too much into it. Lesso says, taking the course is very helpful and you'll never regret it. Awesome. Yeah, working on the skills, shooting at rabbits, definitely. Okay. Definitely. Okay. The decisions need to be made, of course, when you back out. Is this the bottom? And will we be up here? Okay. See you, KG. Yeah, Johnny, playing the midpoint psych level and psych levels work really well in conjunction with other things, right? You believe NFP could be the continuation of you? No, I don't think so. Nope. You know what? I think I'll leave it at that for today. I think that'll be it. So, thank you for being part of the community. Please click the like button. Please leave a comment on the recording. I'll see you in the afternoon. Sure, Mohammed. Mohammed, are you a member of FX Bootcamp? Yep. Well, maybe it's time to step up. You have good questions, but you're going the slowest route possible. Put money in the machine and pull out the knowledge so we could have deeper conversations. So anyways, peace on earth. May the pips be with you. May our profits be above average. Andrew, the meetings are always at 2 p.m. Eastern time. I might change that maybe after summer. Not really sure. Right? Yeah, I know. So how long do you want to waste time? Right? Right? You got the money, but you don't have the time. Well, if those are the questions you're trying to answer, then you need to allocate time differently. Anyways, I'll see you guys later. Take care of y'all. All y'all.